Welcome back to my YouTube channel, especially in Company Corner. As you know, I have started a new sub-series under wealth creation known as Company Corner. There, I pick up a company, get into detailed analysis, and present in front of you. The idea is by doing that, not only you will understand about the company, but you will also develop a knack to do this analysis yourself. Let's move forward. And today we are going to discuss about a well-known company known as Balkrishna Industries. It's a company which has been leader in tire industry, and it has given fantastic return over the years, but last year and a half it has not been doing too well on the stock exchanges. So let's and try to find out, should we hold this share, or time has come to exit from this share, or should we take a new position in this share? All these questions shall be answered in this deliberation. Before I proceed, I'd like to mention to you, investing in stock is a risky affair. Before investing, please do consult your investment advisor or do your own research. The purpose of this video is purely educational. So Balkrishna Industries, it has got a market cap of around 39,000 crore at the current price of 2020, which is the price today. The highest price in the year has been 2537 and lowest 1700 sort of. The stock is trading at a PE of 27.8. If you look at the ROE number, it is superb, 22%, and FI holding is 13%, it got up by 1.79%. Sales growth in the last 3 years is 17% and 5 years is 17.4%. This means on an average, the company sales is growing at about 17% CAGR annually. Profit for 5 years and 3 years also have grown more than 17%. So when you look at these parameters, it appears a very good candidate to remain in your portfolio. And also, the company has generated positive free cash flow in the period 3 years and 5 years. So the company appears fantastic. Let's look at quickly at the return of this company. In 2012, the share price was around 82 rupees, and today, even after retreating from its high, it is trading at about 2000. So almost in 9 years, the company has given return multifold. Its prices have multiplied more than 22, 23 times, which is absolutely superb. The question comes in our mind, although the company has not been moving up in last 1 year, what we should be doing? So for answering that question, let us dig deeper into the company's fundamentals and try getting the answer. So Balkrishna Industries analysis was done yesterday, and here if you look at the EPS growth, the EPS is continuously growing with some fluctuation. Last 1 year, 2 years again, it is taking a little downturn, but all days are not alike. In the life of a company, good and bad days come, and it all depends on the management. If management is good, management is able to grow the earnings and give a greater return to the shareholders. That is what appears in this company. OPM, operating profit margin, or had been fluctuating. Initially it used to be 15%, it rose as high as 31%, now it is at about 20%. Last 1 year, due to Ukraine war, there have been a lot of headwinds for the company. It will be interesting to know this company gets 49% of its revenue from Europe and around 23% from India and around 15% from US. As you all know, European countries have been going through a major energy crisis due to gas prices, and there have been a lot of shutdown in terms of their local industries. Demand is coming down, inflation is high, and since this company has a huge export to Europe, it is facing a big time headwinds. Sales also has been growing. Last 10 years, 2,000 to almost 10,000 crores, 9,800, 9,900 crores. So almost multiplied 5 times. So when you can get company like this with such a strong fundamental, and if everything was good, the company could have never been available at the price it is there today. So let's look at cash flows. When you take the summation of cash flow from operating activity and cash flow from investing activity, I have mentioned that it should be a positive number. because most of the time. So here on a 11 years time period, only 5 times it is negative and 6 times it is positive. So it's okay. This indicator is okay. So the company generally is okay in that terms. In terms of ratios, if you look at debtor days, again 48 days, not that bad. If you look at the variation over here, it has been sort of hovering in that range. Cash conversion cycle, there is a build-up, which clearly shows that deteriorating due to European situation, which I have discussed, because 49% of sales is coming from European company, and company management is very competent. So it will be able to steer in this tough situation and come back to us with a much better return. Let's look at peer comparison. Now here you have likes of MRF, Apollo Tire, CH, JK Tire, Goodyear, and TVS Sri Chakra. These are some of the parameters which we have been discussing time and again in terms of evaluating and selecting a company, like return on equity, operating profit margin, net profit margins, sales growth in 5 years, sales growth in profit growth in 5 years, sales growth in 3 years, and profit growth in 3 years. And all these parameters, the company stand number 1 in the industry. So this has got a very clear-cut leadership in the tire industry. Now let's look at the valuation, relative valuation. MRF is selling at 66.37 PE, and CAT is about 182 PE, and TVS Sri Chakra 40 PE, and compared to that, an industry leader you are getting at 27 PE, which is a bargain in my opinion. And in terms of its growth, you have seen what the company has returned. So let's go ahead and look at, is it attractive to buy at this point in time, or should we wait for some more time? So for doing this, what I'll do is I will look at, as usual, 5 years P. So if you look at 5 years P, you will see that it is well below the median of 29. And 3 years P, if you look at, again, this is below median of 29.4. And if in 1 year P, you will find this is below median of. So all these P parameters, this is a low, trading at a lower value. This means valuation is in a buying range. Now when you look at price to book value, now 5 years price to book is lower than the median. In 3 years price to book is lower than median, and 1 year price is also lower than median. So when I go back and look at this chart, like 5 years, 3 years, 1 year, both P and PB all are low, which is really fantastic. So looking from the analysis done so far, the company appears in a very good range as well. One can accumulate for long term. Now let's move forward and look at on some of the research houses or analysts what they have to say. Sher Khan, Hem Securities, Care Choksi, ICC Direct, and Care Choksi, they have recommended the stocks in last few months time and again. And although they are saying 2150 rupees to 2200 target or 2500 rupees target, but this stock could be very good for long term. When you look at this MF schemes, 11.1% of the share is held by MF schemes, and FI having about 13% of the shareholding. So when you look at all these parameters, friends, the following conclusions can be derived at. Margin is under pressure, reasonable valuation, good for entry for long terms, typically I'll suggest 5 years plus, could be better even for 3 years, fluctuating OPM, too much emphasis on export, because it's a lopsided for European export, which they have gained benefit in past, and I hope company will take some action in that area, because 49% sales are from Europe, as I had discussed earlier, trading below 250 days moving averages. So on all these parameters, the company appears quite good. So summarizing the analysis, it's a brilliant, excellent company, has been doing fantastically well, has given a huge return to the shareholders in past. Today, it is available at a bargain price because there are some headwinds coming from Europe. And the management, the good management, always succeed when they have got tough time. So looks like this is a tough time. It will continue for 6 months, 1 year, and that will go, because whatever comes goes back. Nothing stays here. So from that perspective, if you are contemplating to add it, do analysis and add the stock at current price in your portfolio. If you are you have invested in this share, hold it for long term. That is I do have investment in this share, and at this point I am under loss. but still I am trying to add some more shares so that I can get or reap a big benefit in time to come. So friends, in the company corner today, we have discussed about Balkrishna Industries. Hope you liked the analysis. If you liked it, please put your comments and do circulate this video in your social groups using WhatsApp, Facebook. And if you have not subscribed so far, please do subscribe to the channel and let us grow this channel and create a ecosystem where all of us can discuss on certain topic and take the things forward. Thank you so much for your time and remain engaged.